You're chilling in the rain. You're some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry. Baby, you give me ice and fire. You're channeling wind and rain.
What is up, everyone, and how are you doing on this amazing hump day? That's right, it is happy Wednesday, everyone. How's it going? Yes, we've got Jerome Powell and the Fed today with the expectation for what? That we're gonna have a pause. That's right. Now, I was told, now I'm just throwing it out here, I was told to have green in the background. No, I'm not saying money a funky way. My jaw still hurts. In fact, just being fair, I haven't even gotten done with my ice cream yet. I was eating some ice cream to help numb my throat and my jaw because my freaking mouth hurts bad today. But do you want green in the background? Let me know. Come on, chat. Let me know. Should we go green in the background or should we go red and blue behind me? Let me know in the chat. I'm going to sneak some more bites of ice cream because for real, I'm in a little bit of pain today. I think it's because I did 4 videos yesterday. I wanted to talk a lot yesterday to make sure that I could do the live stream today. So I'm going to eat my Neapolitan ice cream really quick here with a little bit of honey drizzled on it. So let me know, green on the screen or what we should do. Let me know in the comments. I'm going to eat my melted Neapolitan ice cream to numb my mouth. This is really good. Okay, you guys are all saying green. Let's do it. All right. Let's switch that one to green. Let's switch that one to green. There you go. We got green on the screen. Hopium it is. And does anyone... Oh, sorry. And here's... Okay, real quick. While I got y'all watching, okay, you will see this completely unedited. You're going to see me make a lot of mistakes. You're going to see me clear my throat weird ways. You're going to see me swallow a lot. You're going to see me mispronounce a bunch of words. You're going to see me just like kind of check myself like word-wise. This is unedited. This is an unedited live stream, so you're going to actually see how I actually am right now, like how I'm actually doing. So just bear with me. I am nowhere near 100%. I would say I'm probably right now at about 80%. I'm having a lot of problems still with the nerves on this side of my face. It's still pretty problematic, but I am getting better, which is really, 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 really good. Oh, someone put down Choo Choo Bitches. Hold on. I got your back on that too. Because check out what I got up on the screen. Hold on. I'll even move my mic out of the way, girlfriend. Wait a minute. Here we go. What do I got up on the screen? Oh, I've got that. I've got Choo Choo Bitches up there. There we go. There we go. I've even got it flashing. Yeah, buddy. So yeah, we're going to be seeing what Jerome Powell says. Essentially, look, he is going to pause. All right, that's the deal right now. Jerome Powell is going to pause. Let's slow the speed down. We don't need to go that fast, right? We could slow down the speed up on the screen, right? He's going to pause. Essentially, look, we're not going to see rate cuts until we see the tariff stuff change. Now, I did bring a story to you earlier today where we said, hey, look, we're going to have a meeting this weekend between the United States and China. Now, what's good about that is that United States and China meeting this weekend, if we get the tariff stuff figured out, we're then going to be able to start looking at rate cuts. Because Jerome Powell is not going to cut rates until he knows the direction that the greater global economy is going. You know what I'm saying? So like this is like really good. We're actually getting things set up the right way. So I'm like cool with this. Am I happy right now that the volume is kind of meh? You know, I kind of wish like it would have been a little bit better going into this, but like, I get it. The markets, people are sitting on the sidelines. You know what I mean? So I understand it. But right now, let's be real here. Right now, what are the markets looking for? The markets are looking for guidance, you know? And it's right. Right now, it looks like the first rate cuts that we're going to get are going to be in July. It looks like we have a 72% chance of rate cuts in the month of July. Let me bring the camera down here just a little bit. Back on me. There we go. Let me turn off the old LED sign in the background right there. Basically this, Sean Williams says we need some dovish language. That is very, very true, everyone. What we need right now from Jerome Powell and the Fed is something very gentle today. We really do. We don't need anything negative. The worst thing, okay, the worst thing that we could get today would be Jerome Powell to say one rate cut this year. That would be the worst thing that we could possibly get this year. So right now we're still on cue for 2, but if we get 1, that would be poop sandwich. If he mentions 1 rate cut, this market is going to flash red. Someone said turn up the mic. Let me see. I had to be very careful. I can't. Hold on a second. Let me move this over here. We should have hopefully enough power with my voice. My voice should have enough power right now. Let me see here real quick. Let me see. I can turn this up just a little bit more. There you go. Hopefully that's a little bit better for you. All right, sorry about that. Let me give me a second here. I'm sorry. Like, this is still hard for me to talk. When I do videos, I edit out a lot of the times where I pause. So let me just have a little bit more ice cream. It helps soothe my mouth. I still have a whole bunch of stitches in my mouth. So let me just have just a little bit of ice cream to help out here. I'm eating Neapolitan ice cream drizzled with honey. This is so good. I love it. I love it. All right, everyone. So yeah, that's what we got going on. Some of the problems though that we got is the stablecoin bill. Stablecoin bill is this a little nerve-wracking. I gotta be honest with you. We're seeing the Democrats, they got the support to kill this. They really do. The Democrats right now, it looks like they can stop it. They have enough power in the Senate to pull the votes out. No, it is not Manuka honey. I have seen that all over the place with all the advertisers. No, it's not Manuka honey. Essentially what happened was this. Do you remember when we had the elections in November and when they said there was a whole bunch of Democrats that were going to support crypto? I don't remember if it was 7 or 9 people that said they were going to support crypto from the Democratic side. They yanked their support, everyone. So that's why the stablecoin bill dropped support-wise right here. This is why you're seeing this drop in support right now for the stablecoin bill. That's not good right now. So, what that does is that pushes out how far we can get now the rest of the regs for the crypto market. You're not going to get crypto regs if you don't get stablecoin regs first. Murray Burns says 9. Yeah, I thought it was 7 or 9 people. Sorry. Yeah, it was 7 or 9 people, so 9 people out there. Yeah, so we lost some support from the Dems, and basically what they want is they want to ban members of Congress, presidential people, from being able to own crypto. And what they're saying is if they can ban members of Congress and the president from owning crypto, that they would then look at rewriting the stablecoin bill altogether. So you know what that means, right? That means we're looking at pushing that stablecoin bill all the way out until June, if not July. Hold on a second. Let me take another bite here. All right. It's not comfortable for me to talk like nonstop yet. So I just got to be very cautious here. Trial by Fire says, you're sounding healthier in every recent video. Many thanks for the live. Well, thank you. I appreciate it. I feel about 80% right now. Every so often I get these very, very weird bouts where I feel like I have no other better way to say it. I sound like, I feel like high. Like, that's the best way. Like, I get very dizzy. I get very out of it. I get like the shooting pains through my face. I get a lot of pressure. I get really, 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 really out of it. And I had a bout like that earlier, about an hour ago. So I took a little bit of pain meds to kind of help me out with that. But I am feeling overall better. So yeah, crypto right now is basically hanging in the crosshairs when it comes to regs. Jonathan Hamilton says, will XRP go sub $2 today? No, XRP will not go sub $2 today because right now everyone is expecting the Fed to pause. We're all expecting it right now, okay? And that's the whole deal. If we were to get a shocker from Jerome, we're not. We're going to get a pause. You know what I'm saying? Like, I'm not worried about this at all. I guess the thing, though, that has me, that could really tank the market would be this, okay? What could really tank the market right now would be is if this weekend's tariff meetings go to crap. Because this weekend, we're having a meeting between the United States and China. And if that goes bad, or if the meeting just goes sideways, or if they walk out, or something, you know, like funky like that happens, then expect the markets to take an absolute dump-a-roni. Here, let's refresh it because we got some news in from the Fed, and you're going to see a pause-a-roni, everyone. You ready? In support of its goals, the committee decided to maintain the target rate. That's right. The Fed paused. Yes, everyone, the Fed paused. There you go. The Fed paused. So, there you go. Told you, the Fed paused. Let me get another quick thing of ice cream real quick right here. It's turning into like this really gross soupy mess. But like I will say, this is one of the things that helps soothe my jaw as much as possible. So tasty. I like it. I like it a lot. So yeah, the Fed decided to pause. We knew this was going to happen. But the real thing that we're looking for is when Jerome Powell goes on the mic. We don't want him to be hawkish. That is the worst thing that we could expect right now, is Jerome Powell to be hawkish. That is the bad thing. Yes, the Fed paused, everyone. The Fed did pause. Here, I'm going to put this down in the chat real quick. Give me a second here. The Fed paused on rates. No cut on rates. Okay, cool. All right, so we got the pause on rates. Now, in terms of what's going to happen with crypto, let's do this. Let's zoom into some of our favorites right here. Let's open up XRP super fast. Let's go to some candlesticks, and let's zoom in on these candlesticks. Let's go to the 1 minute and just see what's happening here. Here you go. This is the initial reaction from XRP regarding that. Yeah, Jerome does need to speak directly to the market. Yeah, the candlesticks are pretty, but remember, this is always the initial reaction. Don't ever watch the initial reaction when it comes to rate cuts. Just kind of like watch the market a few hours and watch the market react as Jerome Powell talks. Now, check this out. This is something that you have to pay attention to. Look at this right here, right at the top of my screen. You see this right here? The volume. Watch this. Oh, hey there, Klaus. What are you doing, buddy? Volume right here. Come on. I can't do this. Here we go. You see that up there? Volume is starting to spike. The players now are starting to get back into the market, okay? Essentially, they wanted confirmation that the Fed was going to pause. Now that they know that the Fed is going to pause, they're going to make their moves until the next meeting. They're going to make their moves, and they're going to also wait to see what happens with the meeting this weekend between the United States and China when it comes to tariffs. All right. It hurts a lot for me to talk, so I'm just trying to get ice cream in my mouth to kind of cool it down. I'm sorry about that, everyone. I know y'all really like the stream, and I'm just trying to do my best, but like it is still somewhat painful for me to talk, so I'm just trying to like soothe my throat and my mouth at the same time. So yeah, in terms of buying opportunities, Garden with X says, I hope we get some buying opportunities. I want to stack as much as I can before it shoots to the moon. If you want buying opportunities, your best opportunities for buying are going to come from two things. Number one, tariff talks imploding. Number two, the stablecoin bill completely imploding to shit. Okay? That is going to be the two things right now that completely throw things out. The other thing, too, is let's be real here, okay? If India and Pakistan start going like really, really bad, and I mean really, really, really bad, then you're going to have a problem there, too, because that news broke last night, and I don't know if y'all have been paying attention to that. India and Pakistan have some big problems going on. If that escalates and starts spreading, you're going to have a lot more problems to worry about. But what's really cool, and I think we all got to pay attention to this, okay? Look at this. Look at the altcoin season index. Do you notice how this is starting to pick up a little bit right here? Check this out. This is actually really cool. We're starting to see, no, it's India and Pakistan. Yeah, India and Pakistan last night is like really, yeah, that's good. We have to pay attention to that. But what happened is, look at this. Look at now all the altcoins that are starting to outperform Bitcoin. Here's Bitcoin right here, okay? Yeah, did you like that? I thought they were talking about cricket. That was pretty good. That was my Twitter comment. But look at this. Look at all these altcoins now that are starting to outperform Bitcoin. Now, some of our favorites, though, are still getting beat by Bitcoin over the last 90 days. But you're starting to see more of the market outperform BTC over here. That's important to pay attention to, okay? So, we're going to be paying attention to several things. How do the altcoins react to the stablecoin bill getting messed up? How are we going to react to the tariff talks this weekend? And how are we going to react to what, everyone? How are we going to react to the changing of volume? And that's talking about the volume coming in. Let's see. Sean Williams says, when is Jerome speaking? I thought it was now. Jerome Powell will be on the mic at 2:30 p.m. Eastern time. So we got about 24 minutes until Jerome Powell comes on the mic. Now, I do have a vote, okay? I had a vote. It's on the main channel page, okay? And the vote that I asked you for was this. Did Trump screw the crypto market and crypto regs with the launching of his meme coin, World Liberty Financial, and stablecoin? As of right now, about 2/3 of you are saying yes. Trump did screw over the crypto market by launching his own crypto endeavors. So, I want everyone, if you haven't already, please go to the main channel page and vote and let me know if you think Trump screwed over the crypto market, all right? Just throwing it out there. I want to know what you think in regards to that. Other things that we are paying attention to right now. BTC dominance, right? We haven't seen BTC really touch that 100,000 mark in a while either, have we? That's kind of something that's kind of been bothersome too. Because let's be real here. When it comes to BTC, we know as much as we hate it sometimes, right? Right? Let's put it out there. As much as we hate it sometimes, BTC does bring the market up with it or puts it down with it. Jesse Seeger says, no rate cut pause. Yeah, I know, Jesse. I announced it a few minutes ago, my guy. You're a little late, dude. Yeah. And I've been telling everyone for the last several weeks that we were going to have a pause. So for all the channels that were calling for cuts that are Hopium BS channels, I've been the one telling you the realistic news saying, no, you're not. You're not going to get the cuts. I've been giving you the news whether it's good, bad, happy or what? Happy or sad. So now let's get back into some crypto news here because what we got to talk about is here. We got to talk about this. We got to talk about the market being tugged by BTC because that's a big one. So look, let's talk about this. We've been talking about BTC for a while here. Look at the 1 month chart of BTC. We're kind of getting closer, right, to the 100,000, but we're not there yet.
BTC gets to 100,000, we're going to have a better chance. You know what I mean? And as much as we don't like it, as much as we don't like BTC, it does move the market with. So yeah. Tyler Yetzer says, wait, I'm just getting back. Did I miss it? It was a pause, Tyler. We paused. That's the deal. Stephen Baird wants me to say tariffs so that you can drink. And for those of you watching right now, I cannot partake in any sort of fun for a while. So please drink for me because I simply cannot at the moment. I cannot partake in anything sort of fun like that. Just throwing it out there. So with BTC, I think that's something we need to pay attention to as well. Is we need to see when BTC starts roaring. Because look, BTC roared back in December and again back in January, early February. Since then, it's been boring. So now we're looking at this going, well, wait a minute. If BTC can pump back up, maybe it'll bring the rest of the crypto markets with it. But over this last month, the BTC chart is really, really boring. Josh Fisher says, edibles, I can't. And the reason I can't is because that increases capillary blood flow, and I can't because of all the nerve problems that I got in my face. We got a pause, everyone. We got a pause. So just throwing it out there. If you're hearing any problems with the mic, just refresh your feed. Everything on my end is coming out nice and crispy clean. So yeah, I'm not having any, look, see, I got my feedback monitor right here. Everything is coming out clean on my end. So just refresh the stream if you do not mind. But right now, do me a favor. If you got any questions, if you got any comments, now's the time to bring it up because we are waiting for Jerome Powell and the Fed. He will be on the mic in about 19 minutes, everyone. 19 minutes. Tyler says, I knew we were going to pause because I watched Crypto with Klaus, but was he being bearish? For me, it's not about being bearish. For me, it's about watching the reports, and it's about listening to what Jerome Powell says. The thing is this. You knew Jerome wasn't going to cut until we get stuff figured out with tariffs. Why would Jerome cut rates until we learn, like, why would Jerome cut rates if we don't know what's happening with tariffs, right? I mean, think about that. The tariff thing is so big right now. It's so crucial. It's so key that you can't do anything until we get that. Robert Melvin says he's realistic. Yeah, exactly. Peter Gosner says, if tariffs end, does the drinking game end too? No, it doesn't. We'll just make a new drinking game. Maybe our new drinking game will be like the stablecoin bill game. Right? What do you think about that? Infinite Oceans dropping support on the channel. Thank you very much. Everyone give Infinite Oceans a big thank you. Says, pause the rates, pause the drinks, stack the dip. I like it. Thank you very much for that. Yeah. We're going to have a pause. And you know what's really weird about it here? Check this out. We most likely are going to have a pause in June as well. Look at June. June looks like a 71% chance for a pause as well. So think about that. We might be pausing rates for a while. Now, what does that do, though? That sets us up for having a big back half of 2025. And Robert Melvin, Reverend Funky, saying the thing that we're all thinking. The new word will be regs, or it's going to be stablecoin regs. Maybe I'll make it stablecoin regs or something like this. Maybe that's what it'll be. Klaus is the native chokin of the Choo Choo Bitches Network. Oh, I love that. That's really cool. I like that a lot. Greg Dalto says, Powell is not proactive whatsoever. I agree, Greg. And see, that's the whole thing. For those of you watching this right now, we follow the movement of money on this channel. And I'm not talking about the BS hopium. I'm talking about the real stuff, okay? And what we've learned is that Powell was late to raise rates, right, when the Rona happened, okay? So if Powell was late to raise rates, if Powell was late to start cutting rates, we've already seen the Canadians cut rates. We've already seen the European Central Bank cut rates. We've already seen different zones globally cut rates. We know he's going to be late to cut rates yet again, right? So that's why you can start leaning into what Powell and the Fed's tendencies are. The Fed is overly cautious. Overly cautious. Last Chance says, will this hurt our ETF chances? No, this has nothing to do with ETFs. ETFs have more to do with the SEC. This right now has nothing to do with the SEC. What's up, Nick? I see you there. How you doing? Donnie says, Ripple replacing Swift. What happens to XRP? Ripple isn't replacing Swift. I don't know where that's coming from. Ripple's definitely not replacing Swift. Trial by Fire has a good one. Drink water in between. I'm definitely going to be drinking water. I've got electrolytes. Let me drink a little electrolytes. Everyone should drink some too. Oh, here you go. Jesus My Savior says, what's the point of holding stablecoins long term if it's backed by Fugazi money printer go burr currency? Well done. The problem with stablecoins is if the United States goes on a money printer go burr spree, that threatens the backing of stablecoins, right? Because the stablecoins are backed one-to-one by US-backed things. So then if these US currencies now are all money printered and it totally weakens that, well, it weakens the stablecoins. You know, that's a big problem. NVIDIA Shield says, you don't know if Ripple is replacing... Ripple is not replacing Swift. I don't know where people are getting this stuff from. Like, it's... Look, I understand that there's a lot of influencers out there that are trying to shill you on all sorts of weird, crazy garbage, but that's not what's happening. Ripple is not replacing Swift. That's not the deal, okay? Mike says, will you be showing the 2:30 meeting? Yes, I will be showing the 2:30 meeting. I've got it queued up and ready to what, everyone? Ready to go. Right now, the market is looking okay. Bitcoin sitting at 96,000. XRP's hanging out at 211. ETH is still a laggard right now. Sean Williams says, stablecoins will be backed by gold after it's revalued. Scott Wilson says, Ripple could complement Swift. Scott, that is a better term. Ripple will not replace Swift. It can complement Swift. That is a better term. It will not replace it. It can complement it. That's the best idea out there that I've heard. Because you know what? I'm tired of people talking about, oh, this and that, all the burn rates and stuff like that. It's all hopium BS. The same people that are telling you that Ripple is replacing Swift are the same people that are telling you that there was an XRP $40,000 buyback. They're the same people that were telling you all the other stupid lies. Seriously, think about it. What about those same people that told you that the Russian stock market was going to be run on XRPL, right? Isn't that the same thing? Ripple is... Oh, wait a minute. Wasn't that the same people that said that Ripple was going to be run on Fedwire? Yeah, that was a lie too, wasn't it? That's my point. So no one's going to be replacing anyone. It's just like there's no stablecoin that's replacing any stablecoin. They're all going to be working together in tandem. They're all going to be separate or doing their own thing. It's just, I don't understand. Niver dropping support on the channel. Everyone give Niver Nix a big thank you for supporting it. I appreciate it so much. Appreciate it. Thank you. There are videos of Brad G talking about XRP replacing Swift. That is why people mention this. Yeah, and the whole thing too is there's a lot of fake AI videos of Brad Garlinghouse out there that are lying to people. So think about that. It's kind of crap. I'm just throwing it out there, all right? Just remember, all those channels, okay? All those channels out there that told you that the Russian stock market was going to be built on XRPL. Why would the Russians build their stock market on a US-based company? Makes no sense. People are telling you what you want to hear to give you hopium. Also, Krishna dropping support on the channel as well. Everyone, give Krishna a big thank you for that. Thank you so much. I greatly appreciate the support. Doing my best with what I can. Krishna says, I hope Ripple will compliment my bank account like choo-choo bitches. Thank you. Thank you so much. And here's the whole thing. What's going to happen is this. Players are all going to do what they do is best for them. All right? Oh, but bro, what about BRICS? We've been hearing for how many years BRICS is gonna do this. BRICS is gonna do that. Oh, what about all these documents? You mean all the documents that have proven to be fake? You mean all the documents where people write their names on them and then when you try to find them, we find out that they're all doctored documents? Come on now. Everyone's like, oh, I've seen the documents. You mean you've seen the documents that people have created that are fake? Come on, dude. Come on, man. Here's the thing. If XRP was replacing Swift, why are we stuck at $2? Anyone? If the Russian stock market was being built on XRPL, why would the Russians choose an open source chain to build a stock market when they can build their own? That doesn't make any sense, does it? No, it doesn't. FedNow does not need blockchain to move money, do they? No, they don't. So there you go. Tyler says, even if so, do you realize how much shit Charles Hoskinson says that didn't happen? Even if he says it doesn't mean it's true. That's right. Think of all the things that Charles Hoskinson has said that has never come through. Remember when Charles said that he was going to have a big position with the United States government and he was working with the United States government? That was false, wasn't it? Yes, it was, everyone. It was another lie. Remember about all those NDAs out there with banks? What's up, Jeremy? Jeremy's hanging out with us. Remember all those NDAs? Even David Schwartz said that the NDAs with the banks and Ripple were all about a marketing strategy to get people interested into Ripple. He even said that it has nothing to do with it. He said it was all a marketing ploy. The problem you have is this, and you guys want to have some fun? You guys and girls want to have some fun? Let's do it. Let's do it. You want to poke the bear? Let's poke the bear, homeboys and homegirls. You want to play in my world? Let's play in my world. Let's search XRP, okay? And let's see. Let's find all sorts of fake stuff on here. Treasury Secretary Scott Bessent said that XRP... No, Treasury Secretary Scott Bessent never said anything like that. He never said anything like that. You can look up all this stuff, all right? XRP influencers, it's all BS, man. You have to look at the news out there and you have to realize that the majority of the stuff that's coming out here is all fake. That's the biggest problem that you're dealing with right now. If half the stuff was real, the prices would be better than where they're at right now. Why would the Russians pick a United States company to run their stock market? Why would the Russians pick Ripple to run their stock market on? That makes zero effing sense. Use the thing between your ears, pull your heads out of your asses, and think. You know what that is? Those are influencers out here on these social media platforms. Here's one, Ripple News. I am launching a Ripple Rewards program. Guess what? This is an AI fake video right here. Guess what? Ripple is not giving out 100 million XRP. That's a scam. You want to keep going? Let's keep scrolling down. We could keep scrolling down and go even more. Here's another one. The United States should be the main source for digital assets. They tag XRP in here. This had nothing to do with XRP, but they tag it in there to get gullible people in here to believe the stuff. There you go. What about the quantum financial system? Girlfriend, that's bullshit too, isn't it? Here's another one right here. More BS. More crap. Anyone else want to go over more crap? Because there is more crap. We can go with even more. Jeremy Touche dropping support on the channel as well. Jeremy says the only place for the real truth right here with Klaus. Everyone give Jeremy a big thank you for the support. This is the problem, everyone. The problem is there's so many influencers out here. Oh, here's another one. Fresh news. Ripple is pleased to announce that you're eligible for the XRP bonus program. Guess what? That's fake as well. Oh, wait a minute. This person just posted this again and again. Oh, and here's another one. Here's another one. Here's another one. Oh my gosh, I'm going to keep going. Another one, 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 another. Oh my God, they're trying to scam you. This is nuts, isn't it, everyone? So for real, pull your heads out of your beeholes and realize that people are trying to screw you over with hopium. No, XRP is not replacing SWIFT. Things are going to work together. No, the Russians are not going to give over control of their entire stock market to a US-based company. Do you know who Ripple tried to buy? Circle. USDC. Yes, USDC. Not Rupel DC, but USDC. Scott Wilson's right. Hopium is a hell of a drug. Terry Dickey is right. Truth bombs here. Klaus doesn't feed BS and hopium. Just like the jabs, Enrique. You see my point, everyone? That's where people are getting screwed here. They're getting screwed because you're being lied to regarding this stuff. And it's all this social media machine. Okay, here's another one. New crazy statement from Jerome Powell. Jerome Powell has never mentioned XRP once, but you know what, my guy? Here they do. They're tagging XRP, RLUSD. Nope, that's not real. Here's another one. Bullish for crypto and XRP. Nope, never mentioned it right there either. Massive XRP alert, game changer. Nope, that's not real either. Anyone else want to try? I don't think so, girlfriend. Yo, you could put me through the most wildest of surgeries in the world, but I guarantee you I ain't falling for any of this BS whatsoever. Why must XRP be 3 digits? It doesn't have to be 3 digits. I've got one for you too. Here's the best thing. I'm going to go into my notifications. Why? Because I'm going to show you something really, really, really cool. Hold on. Give me a second here. Give me a second here. Dun, 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 dun. Here we go. Here's one from Jack the Rippler. XRP will tokenize gold. In other words, XRP has to be more valuable than gold. No, that actually doesn't make any sense whatsoever. Those two have nothing to do with each other. In fact, Stellar is one of the leaders of tokenization in blockchain. Last time I checked, Stellar's price was 25 cents. Oh, wait a minute. Hold on a second here. Wait a minute. Okay. Yeah. So before you start sitting here thinking that Swift and XRP and all this stuff, start doing your homework and stop looking at the influencers out there that are lying to you about stuff. Like, that's all they're doing. And it's junk. Like, dude, like, I'm so tired of this crap because it's hurting people. It is hurting people. It is hurting good people out there. And it's rough. ETH to 80K is XRP's new 589. Come on. Like, in all these videos, these are all scam videos, everyone. Massive XRP power play. Coinbase and top exchanges secretly amass control. Well, guess what? Ripple still owns almost like 40 billion worth that has to be dumped into supply, so there is no power control. So protect yourself with knowledge. Don't protect yourself with hopium. Protect yourself. And here's one. I hope you're aware that banking systems and stock markets will crash soon. How many years have you been sold the narrative that stock markets are going to crash? How many of you out there have been told that banking systems are going to crash? If banking systems crash, is your local gas station going to take XRP for payment? Hell no, girlfriend. I lived through Hurricane Helene when we lost power. You know what happened? They took cash. So yeah, just throwing it out there. Infinite Oceans International says they're getting clicks on YouTube and getting paid for it. That's exactly true. And it's all BS. And that's the big problem. And guess what? The stock market does crash. Did we have to completely rebuild it? No, we didn't, did we? We didn't. All of these people are scammer BS artists out there that are screwing you out of your money. They're using you for clicks and hopium. That's why I bring you the news, whether it's what everyone, good, bad, happy, or sad. And guess who's coming on the mic after me? It's the man up on the screen, Jerome Powell. So yeah, even if I get facial surgery done, I can still kick the crap out of pretty much anyone and keep it real. Thank you for your support. And yo, most of it out there is BS. JP, bring us something good, homeboy.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite heightened uncertainty, the economy is still in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Pardon me. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were likely driven by businesses bringing in imports ahead of potential tariffs. This unusual swing complicated GDP measurement last quarter. Private domestic final purchases, or PDFP, which excludes net exports, inventory investment, and government spending, grew at a solid 3% rate in the first quarter, the same as last year's pace. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a sharp decline in sentiment and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In the labor market, conditions have remained solid. Payroll job gains averaged 155,000 per month over the past 3 months. The unemployment rate at 4.2% remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Total PCE prices rose 2.3% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up, as reflected in both market and survey-based measures. Survey respondents, including consumers, businesses, and professional forecasters, point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of the balance sheet. The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. The tariff increases announced so far have been significantly larger than anticipated. All of these policies are still evolving, however, and their effects on the economy remain highly uncertain. As economic conditions evolve, we'll continue to determine the appropriate stance of monetary policy based on the incoming data, the outlook, and the balance of risks. If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It is also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we'll balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we're well positioned to wait for greater clarity before considering any adjustments to our policy stance. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on inflation dynamics and the implications for our monetary policy strategy. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference next week. Throughout this process, we're open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve.
Steve Leisman, CNBC. Thank you, Mr. Chairman, for taking my question. A lot has happened since the last meeting. There's been tariffs put on, tariffs taken off, and meanwhile, there's a bill advancing in Congress. And I just wonder if I could press you on the last part of your statement. Are you any closer now to deciding which side of the mandate is going to need urgent care first?
Well, so as we noted in our statement, post-meeting statement, we've judged that the risks to higher employment and higher inflation have both risen. And this, by the way, of course, is compared to March. So that's what we can say. I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out. And also, when they do settle out, what will be the implications for the economy, for growth, and for employment? I think it's too early to know that. So, ultimately, we think our policy rate is in a good place to stay as we await further clarity on tariffs and ultimately their implications for the economy.
Hearing you describe what you're looking for in terms of being able to make a decision, it sounded like that's a long-term process before you sound like you're going to be comfortable, or the committee would be comfortable to act on what the data is telling you.
I don't think we know. I think if you look at where we are today, we have an economy that, if you look through, the sort of distortions in Q1 GDP, you've still got an economy that looks like it's growing at a solid pace. The labor market appears to be solid. Inflation is running just a bit above 2%. So it's an economy that's been resilient and is in good shape. And our policy is sort of modestly or moderately restrictive. It's 100 basis points less restrictive than it was last fall. And so we think that leaves us in a good place to wait and see. We don't think we need to be in a hurry. We think we can be patient. We're going to be watching the data. The data may move quickly or slowly, but we do think we're in a good position where we are to let things evolve and become clearer in terms of what should be the monetary policy response.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, there's naturally a lot of PTSD around 2021 and supply shocks, but there are some who argue that the current situation has notable differences. Energy costs are down, housing imbalances look nothing like they did 4 years ago, labor demand appears to be gradually cooling with wage growth running below 4%. What do you see right now that could nourish higher inflation beyond a rise in goods prices this year?
I think the underlying inflation picture is good. It's what you see, which is inflation now running a bit above 2%. And we've had basically decent readings in housing services and non-housing services, which is a big part of it. So that part, I think, is moving along well. But there's just so much that we don't know. I think, and we're in a good position to wait and see, is the thing. We don't have to be in a hurry. The economy has been resilient and is doing fairly well. Our policy is well positioned. The costs of waiting to see further are fairly low, we think. So that's what we're doing. And, you know, we'll see. The administration is entering into negotiations with many countries over tariffs. We'll know more with each week and month that goes by about where tariffs are going to land, and we'll know what the effects will be when we start to see those things. So we think we'll be learning. I can't tell you how long it will take, but for now it does seem like it's a fairly clear decision for us to wait and see and watch.
So when you say that you don't need to be in a hurry, does that mean that could the outlook change in such a way that a change in your stance could be warranted as soon as your next meeting?
You know, as I said, we are comfortable with our policy stance. We think we're in the right place to wait and see how things evolve. We don't feel like we need to be in a hurry. We feel like it's appropriate to be patient. And you know, when things develop, of course, we have a record of we can move quickly when that's appropriate. But we think right now the appropriate thing to do is to wait and see how things evolve. There's so much uncertainty. If you talk to businesses or market participants or forecasters, everyone is just waiting to see how developments play out, and then we'll be able to make a better assessment of what the appropriate path for monetary policy is. So we're not in that place, and you know, as that develops, and I can't really give you a time frame on that.
John L.
Janelle Marte with Bloomberg. So many economists have been pricing in higher odds of a recession, and several are noting that it is more difficult for the Fed to cut rates preemptively given the higher risks for higher inflation. So given the outlook, do you still see a path for a soft landing, and what does that look like?
Well, let me say, I mean, so let's look back and see where we are. So to go through 2024 up to the day, we've had you know, unemployment in the low 4s for more than a year. We've had inflation coming down now in the mid to low 2s. We've had an economy growing at 2.5%. So that is the economy as we see it now. What looks likely, given the scope and scale of the tariffs, is that we will see certainly the risks to higher inflation, higher unemployment have increased. And if that's what we do see, if the tariffs are ultimately put in place at those levels, which we don't know, then we won't see further progress toward our goals. But we might see a delay in that. I think in our thinking, we would never do anything but keep achieving those goals. But we would, at least for the next, let's say, year, we would not be making progress toward those goals. Again, if that's the way the tariffs shake out. The thing is, we don't know that. There's so much uncertainty about the scale, scope, timing, and persistence of the tariffs. So that's that. In terms of preemption, you I think you can look back at the 2019 cuts as preemptive. I wouldn't say that what we did last fall was at all preemptive. If anything, it was a little late. But 2019, we did cut 3 times. But the situation was you had a weakening economy and you had inflation at 1.6%. So that's a situation where you can move preemptively. Now we have inflation running above target. It has been above target for 4 years. It's not so far above target now. And we have an expectation, conditional on what happens, that we'll see upward pressure on inflation. If you look at where forecasters are, they're all forecasting an increase in inflation. So it makes it, and then we've also got forecasts of weakening in the economy, and some have recession forecasts. We don't publish a forecast about that. We don't publish a forecast that assesses how likely a recession is. But in any case, it's not a situation where we can be preemptive because we actually don't know what the right response to the data will be until we see more data.
Colby.
Colby Smith with the New York Times. How much weakness does the committee need to see, though, in the labor market and the economy more broadly to lower interest rates again? Is it about a certain increase in the unemployment rate over a period of time, or perhaps a certain number of negative monthly job reports? I mean, how are you making that assessment?
So first of all, we don't see that yet, right? We have 4.2% unemployment, good participation, wages behaving very well. Participation, I mentioned, at a good level. So, with the labor market, we would look at the totality of the data. We'd look at the level of the unemployment rate. We'd look at the speed with which it's changing. We would look at the whole huge array of labor market data to get a sense of whether conditions are really deteriorating or not. And at the same time, we'd be looking at the other side of the mandate. We could be in a position of having to balance those two things, which is, of course, a difficult balancing judgment that we'd have to make.
On that point about balancing, I mean, you've mentioned that the committee would consider how far the economy is from each goal and the time it would take to kind of get back to that point. But what does that mean in practice? I mean, how much of that assessment will be rooted in a forecast versus data dependence?
It would be a combination of the two. I mean, let's just say this would be a complicated and challenging judgment that we would have to make. Yeah, we're not in this situation, but the situation is if the two goals are in tension, so let's say that unemployment is moving up in an uncomfortable way, and so is inflation. Not the situation we're in, hypothetically, but we would look at how far they are from the goals, how far they're expected to be from the goals, what's the expected time to get back to their goals. We'd look at all those things and make a difficult judgment, and that's in our framework. It's always been in our thinking. We haven't faced that question in a very long time. So again, difficult judgment to make, and not one that we face today, and we may never face it, but we have to be keeping it in our thinking now.
Edward.
Thank you. Edward Lawrence with Fox Business. So we had the CPI report that came out that showed month over month the first decrease in inflation in about 3 years. The jobs report, you said, solid, that we saw. At the same time, we have those new tariffs that we're living under. So given this, should the Federal Reserve be cutting rates at all this year?
It's going to depend. I think you have to just take a step back and realize this is why we are where we are, is, we're going to need to see how this evolves. There are cases in which it would be appropriate for us to cut rates this year. There are cases in which it wouldn't. And we just don't know. Until we know more about how this is going to settle out and what the economic implications are for employment, for inflation, I couldn't confidently say that I know what the appropriate path will be.
So following on that, so then how does President Trump calling on you personally, as well as the Federal Reserve, to make rate cuts affect your decision today and affect your job difficulty?
Doesn't affect our doing our job at all. So we're always going to do the same thing, which is we're going to use our tools to foster maximum employment and price stability for the benefit of the American people. We're always going to consider only the economic data, the outlook, the balance of risks, and that's it. That's all we're going to consider. So it really doesn't affect either our job or the way we do it.
Howard.
Hi, Howard Schneider with Reuters, and thanks for the time. I'm wondering, I mean, given the complexity about the first quarter GDP and what lies ahead, I'm just wondering what your intuition tells you about the underlying direction of the economy right now. Many of your colleagues have said they feel growth is slowing. If so, do you have any sense of by how much, to what degree the slowdown may be? What does your gut tell you about how things are evolving out there?
My gut tells me that uncertainty about the path of the economy is extremely elevated, and that the downside risks have increased. The risk is, as we pointed out in our statement, the risks of higher unemployment and higher inflation have risen, but they haven't materialized yet. They're really not in the data yet. So that tells me more than by intuition, because I think it's obvious actually that the right thing for us to do is we're in a good place. Our policy's in a very good place, and the right thing to do is await further clarity. And there's usually things clarify, and the appropriate direction becomes clear. That's what usually happens. Right now, it's very hard to say what that would be. In the meantime, the economy is doing fine. Our policy isn't, it's not highly restrictive. It's somewhat restrictive. It's 100 basis points less restrictive than it was in, last summer. So we think it's in a good place, and we think the appropriate thing is for us to wait and see and get more clarity about the direction of the economy.
Well, let me press you on this idea of the economy being fine right now, because reading the Beige Book very closely the last time around, there was a lot of negative stuff, negative sentiment that was in there. And I know that everybody's looking at soft data right now. You mentioned it yourself, that the sentiment's sour. But the Beige Book was talking about, the beginnings of layoffs in some industries, prices rising in some places, and an awful lot of investment decisions being pushed to the sideline. Doesn't that point to a slowdown?
It may well. It just hasn't shown up yet. And we all look at all these sentiment and read many individual comments just to get a better feel. And businesses and households very broadly are concerned and postponing economic decisions of various kinds. And yes, if that continues and nothing happens to sort of alleviate those concerns, then you would expect that to begin to show up in economic data. It wouldn't maybe show up overnight, but it would show up over weeks and months. And that may be what happens, but it hadn't happened yet. And also, there are things that can happen that will change that narrative. I mean, they haven't happened, but it's possible to imagine things that. But in the meantime, yes, we're watching it extremely carefully, like everyone is, but don't see really much evidence of it in the actual economic data yet. And by the way, consumers keep spending, credit card spending. It's it's still a healthy economy, albeit one that is shrouded in some very downbeat sentiment on the part of people and businesses.
Michael McKee.
Michael McKee from Bloomberg Radio and Television. The Fed's been criticized recently by a former governor for what he calls mission creep. You take on more problems, use more tools, and then end up building tools to deal with the fallout of those tools, which then makes it a given that you will act more aggressively in the future. Is that a fair critique, and is that something you would be looking at in your framework review?
Sorry, say the critique again.
That the Fed has been involved in mission creep, gets involved in using too many new tools to deal with problems and to go too far. Is that something that the critique was based around the fact that you did QE and QE and QE and went beyond the narrow confines of your mandate?
So, well, I mean, there are a couple. That's not really beyond the confines of our mandate. Look, I would say this: we did things. Essentially, we're on an emergency footing for a couple of years in the pandemic, and it's very fair and very welcome for people to look back over what we did and say, hey, you could have done this better and different. And one thing we hear a lot is we could have explained QE a little better. We did think we were explaining it in real time. I completely accept the thought that we could have explained it better. There's a lot of thinking that we went on too long with QE. I can tell you that The reason we did was we were concerned that we didn't want a sharp tightening in financial conditions at a time when we thought the economy was still vulnerable. And so we did hold on for a long time to QE, and we, of course, tapered and everything. And then we immediately went into QT, and, you know, we're down a couple of trillion. But I get you know, we certainly, with the benefit of hindsight, could have tapered earlier or faster. That's absolutely right. But this is all very welcome. You know, it's you know, we knew doing this in real time that we weren't going to get it perfect, and those kind of you know, after action kind of looks are essential, and we're doing the same thing in our review. So on some issues.
The other part of that critique is that you've taken on topics that are outside of the mandate, such as climate change and trying to ensure that certain groups are benefited by your economic policies in terms of employment, et cetera.
So, okay, on climate, you've heard me say over and over again that we will not be climate policymakers, and that our role on climate is a very, very narrow one. And I think that's what we've done. We've done really very little on climate. You can say that little bit that we've done was too much, but I wouldn't want to give any impression that you know we've taken climate and it's something that we're spending a lot of time and energy on. We're not. We have very, very narrow things. We did one guidance for the banks, and then we did a one-time stress analysis, climate stress analysis, and that's it. And you know, we dropped out of the network for greening the financial system. So we didn't do much on climate, but I do think, and I've said this publicly several times, I think it's a real danger for us to try to take on a mandate like that, which is very narrow application to our work. And you know, the risk is if you go for things that are really not on your mandate, you know, then why are you independent? And I think that's a very fair question. I do think we've done a whole lot less on climate than some people seem to think we did. Anyway, that's what I think.
Should you have taken on the question of bringing unemployment rates down for specific categories?
We didn't do that. You know, what we said was that we never targeted any unemployment rate for individual racial or demographic groups. What we said was that maximum employment was a broad and inclusive goal. And I think what we meant by that was we're going to consider the totality of the country as we look at our maximum employment goal. Of course, we were never going to target any individual group with that, but I think some people, you know, wanted to hear it that way, but that's not at all what we meant. So that's just not a correct reading of our, but I can see how, you know, maybe people found that confusing, and you know, we have to take that into consideration.
Jolene.
Hi, Chair Powell. Thanks for taking our questions today. I'm Jolene Kent with CBS News. You've said wait and see, and the economy is doing fine today, but the impact of tariffs are already showing up at the ports. Businesses big and small are telling us that they feel it, and most importantly, consumers say they feel it, that the challenges are here, and there's no waiting and seeing. For Main Street, what is the breaking point? What would have to happen to prompt a rate cut specifically?
Well, you know, so we really don't see in the data yet big economic effects. We see sentiment, there are concerns that higher prices may be coming or things like that. So people they're worried now about inflation. They're worried about the you know, a shock from the tariffs, but they really haven't. That shock hasn't hit yet. Okay, so you know, we're going to be looking at the not just the sentiment data, but also the real economic data as we assess what it is we should do. And remember, there'll be two effects. One of them would be weakening economic activity, which translates into higher unemployment, and the other would be potentially higher inflation. Again, to say it again, the timing, the scope, the scale, and the persistence of those effects are very, very uncertain. So it's not at all clear what the appropriate response for monetary policy is at this time. And and by the way, our policy is in a good place, so we think we can wait and move when it is clear what the right thing to do is. Really not at all clear what it is we should do. So People are feeling stress and concern, but unemployment hasn't gone up. Job creation is fine. Wages are in good shape. You know, people are not layoffs, or people are not getting laid off at high levels. You know, initial claims for unemployment are not increasing, you know, in any kind of impressive way. So the economy itself is still, you know, in solid shape.
Just a quick follow-up. President Trump now says he does not plan to remove you as chair. When you heard that, what did you think?
I don't have anything more for you on that. I've pretty much covered that issue. Thank you.
Chris.
Hi, thank you. Chris Rugaber, Associated Press. Well, I just wanted to follow up. Earlier, it sounded like you said it was unclear how the Fed, you know, what kind of interest rate decisions you will make later this year. So does that, you know, in March, there was guidance that 2 cuts might happen, you know, 2 cuts were penciled in for this year. Is that now, that guidance from the last press conference, has that been overtaken by events at this point?
You know, we don't do a summary of economic projections at every meeting, as you know. We do it every other meeting, and so this was the meeting when we didn't do it. And you know, we don't also kind of poll people, so I really wouldn't want to try to make a specific projection for where we are relative to that. We will, in 6 weeks, we had the June meeting, and you'll have another SEP. I'm not going to hazard a guess here today as to what it would be. Again, what I would say is that we think our policy rate is in a good place. We think it leaves us well positioned to respond in a timely way to potential developments. That's where we are. And that, depending on the way things play out, that could include rate cuts. You know, it could include us holding where we are. We just are going to need to see, you know, how things play out before we make those decisions.
Great, and just to follow up on that, I mean, when you address the issue of how the Fed would handle both rising unemployment and rising inflation, how are you thinking about the fact that addressing one could exacerbate the other? So a rate cut to reduce unemployment could worsen inflation and vice versa. How do you handle those challenges?
You just captured this is the issue with the 2 goals being in tension. It's a very challenging question. Now, there can be a case in which one goal is very far, one variable is very, very far from its goal, much farther than the other, and if so, you concentrate on that one. And frankly, that was the case. Well, it wasn't a case where they were really in tension, but if you go back to 2022, it was very clear that we needed to focus on inflation. The labor market was also super tight, so it wasn't really a trade-off. You know, I think you know what our framework document says. It says we'll look at how far each variable is from its goal, and also we'll factor in the time it would take to get there. So, you know, that's going to be potentially a very difficult judgment, but the data could break in a way that it's not. You know, I just don't think we know that. The data could easily favor one or the other, and right now there's no need to make a choice, and no real basis for doing so.
Victoria.
Hi, Victoria Guido with Politico. I wanted to ask, Congress is currently debating spending cuts alongside extending the tax cuts. And I know you've talked many times about how the path of the debt is unsustainable, but given that we're also talking right now about the economy slowing, potentially even recession, I was just wondering, is there a danger that spending cuts now could slow growth a lot more?
You know, we don't give Congress fiscal advice. They're going to do. We take what they do as a given, and we put it in our models and in our assessment of the economy. So I wouldn't want to, you know, speculate on that. I mean, I think we do know that the debt is on an unsustainable level, on an unsustainable path, not at an unsustainable level, but an unsustainable path, and it's on Congress to figure out how to get us back on a sustainable path. And you know, it's not up to us to give them advice.
Well, do you think that they should take macroeconomic conditions into account as they look at this?
I think they don't need my advice and our advice on how to do fiscal policy any more than we need their advice on monetary policy.
Andrew.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. In your Jackson Hole comments last year, you said you would not welcome further cooling in labor market conditions. The unemployment rate then was 4.2%, which is what it is now. Many forecasters now predict a higher jobless rate. How has your tolerance for weakening labor market conditions changed compared to a year ago?
So it was quite a different situation. What was happening last year is that over the space of 6, 8, 7 months, the unemployment rate went up by almost a full percentage point. And it was click, 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 click each month. And you know, everywhere people were talking about downside risks to the labor market. At the same time, payroll job numbers were getting softer and softer. So there was a really obvious concern about downside risk to the labor market. And so at Jackson Hole and then in September, you know, we wanted to address that forthrightly. We wanted to show that we were there for I mean, we'd been there for inflation for a couple of years, and we wanted to show also that we're there for the labor market. And it was important that we send that signal. Fortunately, since then, the labor market has really, and the unemployment rate have really been moving sideways at a level that is, you know, well in the range of mainstream estimates of maximum employment. So that concern has gotten a lot less. So, you know, you're at 4.2% unemployment. I think we were in a very different situation. Now we have a situation where, you know, the risks to higher inflation and higher unemployment have both gone up, as we noted in our statement, and we've got to monitor both of those. We actually have a potential situation where there may be a trade-off or tension between the two, potentially. We don't have it yet, and we may not have it, but that's what we have, and that's why I think it's a very different situation.
I mean, I guess I want to follow up by asking how much of a rise in the jobless rate you could tolerate.
Yeah, I can't give you I'm not going to try to give you a specific number. I'll just say we have to now be looking at both variables and which of them is you know, demanding. If one of them is demanding our focus more than the other, that would tell us what to do with policy. If they're more or less, you know, equally distant and equally or not distant, then we don't have to make that assessment. You know, the assessment is you wait. So I'm not going to try to be really specific about what we need to see in terms of a number. But if we did see, you know, significant deterioration in the labor market, of course that's one of our two variables, and we would look to be able to support that. You'd hope that it wasn't also coming at a time when inflation was getting very bad. And again, we're speculating here. We don't know this. We don't know any of these things. It's very hypothetical. We're just going to have to wait and see how it plays out.
Thanks.
Claire.
Claire Jones, Financial Times. In terms of getting some clarity, we've got some talks at the weekend in Geneva between the US and China. A lot of economists are attaching an awful lot of importance to what we hear from those talks. How much importance are you attaching to them in terms of judging what will happen to the US economy going forward? And just in a similar vein, you know, some economists are saying it's days, not weeks, that we have until we start to put the US economy at risk of seeing the sort of pandemic-era shortages and higher prices if we don't kind of soothe relations between the US and China. So it'd be good to have your view on that too.
So, you know, these are not talks that we're in any way involved in, so I really can't comment directly on them. So, but what I will say is this, you know, we had, coming out of the March meeting, the public generally had an assessment of where tariffs were going, and then April 2 happened, and it was really substantially larger than anticipated in the forecasts that I had seen and in our forecasts. So, and now we have we're in a new phase where it seems to be we're entering a new phase where the administration is beginning talks with a number of our important trading partners, and that has the potential to change the picture materially or not. And so I think it's going to be very important how that shakes out. But we simply have to wait and see how it works out. It certainly could change the picture, and we're mindful of not trying to make conclusive judgments about what will happen at a time when the facts are changing.
And just on the fall in shipping volumes from China over these tensions, I mean, do you share that concern that we could start seeing goods shortages and higher prices in the coming weeks if this isn't resolved very quickly?
You know, I don't want to get we shouldn't be involved even verbally in the questions about the timing of these things. Yes, of course we follow all that data. We see the shipping data, we see all that, but ultimately this is for the administration to do. This is, this is their mandate, not ours. And I know as you can see, they're again beginning to have talks with many nations, and that has the potential to change the picture materially. So we'll just have to wait and see.
Kosuke Takami with Nikkei. Thank you for doing this. The volume of imported goods increased significantly in the first quarter. Do you think that this situation could cause a delay in the impact of tariff on inflation? And does this mean that it will take longer time to reduce uncertainty?
The decision we made today? Which decision?
So the future decision. So the volume of the imports, imported goods increased significantly. So the impact on the imported inflation may delay. So what is the impact to your future decision?
Okay, so I mean, I think we think that there was a big spike in imports, right? Very big, historically large, really, and to beat tariffs. And now that should actually reverse, so that it's the difference between it's exports minus imports. So and imports were huge, and so that it conveyed a very negative contribution to U.S. GDP, annualized GDP in the first quarter, as we all know. So that could, in the second quarter, be reversed, so that we have an unusually large contribution to usually positive. That's very likely as imports drop sharply. You could also have, very likely you'll have restatements of first quarter. It'll turn out that consumer spending was higher. It'll turn out that inventories were higher, and so you'll see those data revised up. It may actually go into the third quarter too, and so I think this whole process is going to a little bit make it harder to make a clean assessment of U.S. demand. I mentioned private domestic final purchases, which doesn't have inventories, government, or inventories, government. Anyway, it's a cleaner read on private demand, but that too probably was flattered a little bit by by strong demand for imports to beat tariffs. So that might overstate. It's a really good reading, 3% PDFP in the first quarter. That might actually overstate. So it's not really going to. I don't think it's going to affect our decisions. I will just say though that it's a little confusing, and it's probably less confusing to us than it would be to the general public as we try to explain this. It's complicated, and GDP is sending a signal, PDFP is sending a signal. It's a little bit confusing, but I think we understand what's going on. It's not really going to change things for us.
Courtney.
Courtney Brown from Axios. I guess, we talked about some of the indications of potential layoffs, price hikes, an economic slowdown, all being evident in the soft data. I'm curious why the Fed needs to wait for that to translate into hard data to, make any type of monetary policy decision, especially if the hard data is not as timely or might be warped by tariff-related effects. Are you worried that the soft data might be some sort of false warning?
No, I mean, look at the state of the economies. The labor market is solid, inflation is low. We can afford to be patient as things unfold. There's no real cost to our waiting at this point. Also, the sense of it is, we're not sure what the right thing will be. There should be some increase in inflation. There should be some increase in unemployment. Those call for different responses, and so until we know, potentially call for different responses. And so, until we know more, we have the ability to wait and see. And it seems to be a pretty clear decision. Everyone on the committee supported waiting, and so that's why we're waiting.
Just a very quick follow-up. There was this sort of vibe session, if you will, where the sentiments expressed in soft data did not translate into the hard economic data. How are you thinking about that when interpreting some of the signs in the softer survey data?
You know, I think going back a number of years, the link between sentiment data and consumer spending has been weak. It's not been a strong link at all. On the other hand, we haven't had a move of this, speed and size. So it wouldn't be the case that we're looking at this and just completely dismissing it. But it's another reason to wait and see. You're right, though. We had a couple of years during the pandemic where people were saying just very downbeat surveys and going out and spending money. So that can happen, and that may happen to some degree here. We just don't know. This is an outsized change in sentiment, though, and so none of us is looking at this and saying that we're sure one way or the other. We're not.
Matt.
Thanks, Chair Powell. Matt Egan with CNN. So you mentioned earlier that you're monitoring the shipping data, and we have seen in the shipping data that imports from China into the Port of Los Angeles have plunged, and that has raised concerns about potential shortages. What tools, if any, does the Fed have to ensure that prices and inflation expectations don't get out of hand if tariffs do cause significant supply chain disruptions?
I mean, we don't have, the kind of tools that are good at dealing with supply chain problems. We don't have that at all. That's a job for the administration and for the private sector more than anything. What we can do with our interest rate tool is we can be more or less supportive of demand, and that'd be a very inefficient way to try to fix supply chain problems. But we don't see the inflation yet. We're of course reading the same stories and watching the same data as everybody else. And, right now we see inflation, kind of moving sideways at a fairly low level.
If I could follow up on that, President Trump has indicated that he will likely name a replacement for you when your term as chair expires next year. But your position on the board runs through January 2028, I believe. Would you consider remaining on the Fed board even if you're no longer chair?
So I don't have anything for you on that. My whole focus is on, and my colleagues' focus is all on, trying to navigate this tricky passage we're in right now, trying to make the right decisions. We want to make the best decisions for the people that we serve. That's what we think about day and night, and this is a challenging situation, and that's 100% of our focus right now.
Let's go to Jennifer for the last question.
Thank you so much, Chair Powell. Jennifer Schonberger with Yahoo Finance. Public records of your schedule so far this year show no meetings with President Trump. Past presidents Obama, Bush, and Clinton have all met with Fed chairs, and you met with Trump during his first term. Why haven't you asked for a meeting yet with the president?
I've never asked for a meeting with any president, and I never will. It's not, I wouldn't do that. There's never a reason for me to ask for a meeting. It's always been the other way.
So would you want to meet with him if given the opportunity to get more information?
It's never an initiative that I take. It's always an initiative. I don't think it's up to a Fed chair to seek a meeting with the president, although maybe some have done so. I've never done so, and I can't imagine myself doing that. I think it's always comes the other way. A president wants to meet with you, but that hasn't happened.
And if I could just ask one question on monetary policy. When it is time to cut rates, how will you determine how far down rates will have to come to try to keep a balance on the inflation mandate as employment weakens?
I think once you have a clear direction, you can make a judgment about how fast to move and that kind of thing. So it's really the harder question is the timing, I think, and when will that become clear? And fortunately, as I mentioned, we have our policy in a good place, the economy's in a good place, and it's really appropriate, we think, for us to be patient and wait for things to unfold as we get more clarity about what we should do. Thanks very much.
Well, there you have it, Jerome Powell and the Fed. And that was Oh, okay, that was an interesting one. I will say they had a different atmosphere compared to the rest of the meetings that we have seen. I will say this, though. What did he say? What was the big theme? We're waiting for the data. We're waiting for the data. We're waiting for the data. And what have we learned? Jerome Powell was late to raise rates when inflation started happening with the Rona. He was late to cut rates. He's always been late to the party, and that's the big problem with Jerome Powell. Jerome Powell would be the perfect Fed chair in the early 2000s, but right now, he is just working way too slowly, and I think that's the big problem. He's always waiting not just for data, but he's waiting for data and then a secondary set of data to confirm the initial set of data. A quarter point isn't going to really shock the market one way or the other, right? So if Jerome were to come in and drop it a quarter, oh no, it takes it to 375 to 400. Ooh, big deal. Who cares? Right? So right now we're in a holding pattern, and we're going to be in a holding pattern for a long time. Earlier we talked about BS. Here's one. Russia plans to use XRP for 50% of oil payments. Another lie. Do you want me to keep going, everyone? Be very careful out there with all of the BS that is being reported to you. Russia is not using XRP to pay for oil. But there's a lot of jackbags and jerk-offs out there that are reporting this BS to you. In fact, the way you can tell is you go to these people's pages and you just scroll down and oh man, more Russian stuff, more crap, more lies, more crap, yeah, just throwing it out there. Either way, what did y'all think about Jerome Powell in his speech today? He basically said what I've been telling you. He is gonna pause for a long time. Yeah, that is what Jerome Powell said. He's like, we are going to pause for a while, even though the beige book is bad. And yes, I did read the beige book. All right, I did. I spent my time. Ow, that hurt. Fuck, that was stupid. I did spend my time. I did read the beige book. There are some economies, some regional economies, and that's what the beige book is. The beige book is about regional economies, okay? And there are some regional economies that are really struggling right now. And basically what we're sitting here saying is, look, drop it a quarter for us to give us some hope, to give businesses some oomph, a reason to say, hey man, help us out with this. Krishna says, when Powell receives the data, the date will be old, and it's true. By the time Powell gets the data, that data is already old. Now we're reacting to old news. Richard Hodgson says, fair play, Klaus, you did call it. And that's what I'm trying to tell everyone right now. I'm trying to tell everyone that when you pay attention to the hopium out there like, oh, check it out, everyone. Russia's using XRP to pay for 50% of all oil transactions. If you follow these piece of crap people out here that are lying to you about this stuff with fake articles, you are going to get wrecked. And now remember, what is my job? My job is to bring you the news, good, bad, happy, or sad. Will I be as big of a channel as some of the other ones out there? No, because a lot of people just want hopium. A lot of people want to be told, oh, everything's going to be okay. Oh, everything's going to be right. No, it's not. That's not how the world works. There are some things that are poop sandwiches. There are some things that are good. There are some things that are real. There are some things that are fake. And the problem is you have a lot of people out there, all right? A lot of people out there that post BS, and it's out there meant to hurt you. And that's a big problem. So be very, very, very careful out here. Russia using XRP to pay for oil. Come on now. And that's what Twitter is filled with. I don't want to call it X. That's what YouTube is filled with. And that's why a lot of news that I bring you isn't always fluff and good. Because a lot of times, a lot of the news out there isn't that good. Is it good that the stablecoin bill is screwed? No, that's not good. Is it good that one man, this man right here, Jerome Powell, has that much power? No, it's not good. Is it good that Jerome Powell said, yo, I'm going to pause for a long time? No. But that's the deal. He's slow. He's slow to the party. He's slow to react. So that's the deal, everyone. The deal is Jerome Powell would have been a great Fed head 20 years ago. But right now, the world just moves too fast. Okay, 20 years ago, all right? 20 years ago, all right? If we would have had a problem between Pakistan and India, it would have taken, all right? It would have taken at least a day for that information to circulate the globe. But now, with everyone having 4G, 5G, etc., we get that information within minutes and seconds. We get the alerts on our phones, we get the alerts on our laptops, tablets, and all that kind of stuff, right? You have to react accordingly, and Jerome Powell's not doing that. What did he say time and time and time again? He said, look, we got to wait for the data. In this world, if you wait for the data, you're already late to the party. And that's the deal. You're already late to the party. So the problem we got is the head of the Fed is just slow. Overly cautious. Right? Overly cautious. And for the longest time, I'm just throwing you out there, okay? For the longest time, I've been telling you, be very, very cautious with what you read. Be very, very cautious with what you hear. Follow numbers and follow data and follow trends, okay? I tell you all the time, what kind of data should you follow? CPI data, right? You should also follow what kind of data? You should follow beige book stuff. Mr. Wright says, Klaus, the Fed should be way more responsive. It's true. The Fed should not be reactionary. The Fed should be somewhat proactive. Jeffrey Green, welcome to the entry supporter. Everyone give Jeffrey a big thank you. And that's the big thing. I wish, and I think you all wish, that the Fed would be proactive, right? And I think a lot of problems that our current governments have, and this is with whether you live in the United States, whether you live in Canada, whether you live in the UK, whether you live wherever, okay? We wish our governments were a bit more proactive. Do you remember when when the pandemic happened? How many government officials out there were telling you, get rest, drink a lot of water, do what you can do to lower stress levels, lose weight, exercise, do whatever you could to proactively and preventively be healthy. No one was telling you that. They were all telling you what to do reactively, right? But what's the best medicine? The best medicine is preventive medicine. But see, our government and our officials don't act that way. And you see, Jerome Powell is in the same mindset. He knows what the trend looks like. What is the trend? The trend is that inflation is cooling. But he doesn't want to react on it. He's late to the party again. And the problem is that just pushes the buck down the road. What did I bring up in the middle of the stream? I brought up the debt clock, right? Oh, what are we going to do? Keep kicking the can down the road, aren't we? So why are we going to do that? Why are we going to keep... No, we have to be aggressive. We have to tackle this debt stuff before it shoots us, before it's too late. And that's the problem. None of our governments want to do this the right way. And so what's happening is we're all getting screwed with late data. We're all making decisions now on data that's already a month old, that's already a week old. Trial by fire says this is why we have wild swings. That's exactly correct. Because by the time the data swings over here and we make the decision here, the data's already swung back over this way. Mr. Right says late to the party and late to the after party. Then before you know it, you're already too late to make a decision that counts. So it's tough. And this is the situation that we're in right now. And so now that the world is interconnected, and the biggest change, and I think this is where Jerome Powell and everyone is really struggling, the biggest change is that everyone now pretty much has a cell phone. Everyone now pretty much has access to the internet. Information is flowing so much faster. That means information and decisions need to be made faster. And when that happens, you need to react faster as a government. And so what do I tell you guys and gals and blue-haired giraffes all the time? I tell you the United States is like steering the Titanic. You ready? Oh, we see the iceberg coming. Sir, should we change the ship's direction, sir? Nah, I think we're good. But sir, if we change the ship now, we'll avoid the iceberg. Nah, we're good. But sir, no, let's not steer the ship. Like, you know what I'm saying? And we're not getting that from our governments. We're not getting that at all. And I think that's why a lot of us out here that follow the government, a lot of us out here that follow financial policy, a lot of us out here that don't follow hopium BS, like Russia is going to use XRP for 50% of oil transactions. Come on, how stupid can we get? A lot of us out here in the know that follow the data, that follow the news, are sitting here going, yo, we need to change something soon or else we're going to get wrecked. El Vandy says the system perpetuates itself. That's exactly true. It's like, has anyone ever heard of the death spiral? Right? Do you remember what happened with, what was the thing, Luna UST? Remember that? It was like the death spiral. And you just kind of keep going over and over and over and over. And before you know it, you go into this spiral and it just kills itself. And that's totally what happens. Iceberg. What iceberg? Full speed ahead. Fire at will, Commander. Moshtaba says it wasn't clear what he was saying. Yeah, Powell had a lot of problems talking. Maybe Powell had facial surgery like I did. Do you think maybe that's what happened? I think maybe that's what happened. Maybe Powell and I both went and saw the same doctor. You know? I just... It's frustrating because when you make a lot of money, and I'll be fair here, okay? When you make a lot of money, inflation doesn't really bother you. When you make a lot of money, you don't give a shit if home prices go up 10% because you got a lot of zeros in your bank account. When you make a lot of money, you don't care if interest rates for cars are high because you pay for your cars and your houses in cash. But for the everyday person, you get wrecked, man. You get wrecked. So Jerome Powell and the rest of the government, the rest of the people in charge, they're so far out of touch that they don't realize the problem that they're putting most people through. So I just think that we all have to kind of just take a step back and we have to look at the bigger situation. And the bigger situation is that you need to take control of the information that you're getting, and you need to get it as fast as possible, and you need to get it as accurately as possible. And you need to make the decision that best suits you. Now, what I want to do here is this, okay? Give me a split second. Let me take a quick drink. So, I got an ice cube down here just to kind of help me out a little bit. Let me do this. Do you got any questions? If you got questions right now, let's put questions in the chat. Let's talk about it. Let's hang out a little bit. I'm feeling okay. I took a little bit of a pain medication while Jerome was talking. So I think I can get through this a little bit. Let's talk some questions. Let's hang out. I know y'all have some things that are on your mind right now. All right. Let's work through this. Let's discuss some stuff. Let's see what's on your mind. Let's get it all out in the open. Let's have an open mic, open forum, and let's see what's on everyone's mind. Right now I'm gonna let chat decide where we go. Okay, is that cool? I'm gonna let chat decide where we go. And I'm going to let y'all take it from here. Brad Garlinghouse says, who makes money from rates staying high? The banks do. Plain and simple, the banks do. Banks, credit card companies. Oh, yeah. He meant to say short-lived, but he said short-lived. You could tell it was just, Jerome just, look, Jerome and Trump just don't get along. Plain and simple. Plain and simple. Quintessent, oh, okay, I'm sorry. Q's, damn it. The Q's are hard for me to say. Quintessence Quest says, we're not having an altcoin season, are we? Look, we need regs for an altcoin season. And until we get stablecoin regs, we're not going to get there. Manny Gameen says, so are we getting 2 rate cuts? For now, Manny, Jerome is happy on just pausing the rest of the year. He didn't specifically say, though, only 1 rate cut instead of 2. Now, here's the deal. Here, let me share with you guys and gals in blue-haired giraffe something. This is what you need to pay attention to. Are you ready? This is why, okay? This is why you follow this channel. All right. You see this right here on the screen, this June 17th to 18th. You see this asterisk right here? That asterisk means there's economic projections, okay? What that tells you is that is when all of the Fed heads, okay, the different people that vote for the cuts, they're going to give us their expectations on how many cuts for this year into next year, okay? Their expectations for inflation and so forth. So the next meeting, the meeting that we're going to watch on the 18th of June, okay, they're going to tell us if we expect to get 1 or 2 this year. That's the big one. That expectation, right? You see this? It's very, very different. All right? See how like even the minutes look different, like the meeting materials look different? This economic projections, this asterisk right here, we're going to get way more data this next meeting. That's going to let us know. He didn't say anything this meeting, whether we're going to get 1 or 2. All right? Just throwing it out there. Lil Havana says, are regs preventing XRP from going up? Honestly, tariffs, regs, those are the 2 big things right now holding us back. Tariffs and regs. Rates, yeah, to an extent. But I think right now, we can look past rates if we got the regs. Let's see. Juan Carlos says the meeting the 17th of June, Jerome Powell and Doge. Oh, man, that would be nice. By the way, yeah, the 18th of June is going to be the next one that we're going to hang out. Gabe Mucha says, Klaus, do you think China tariff has some resolution this weekend? The market can have some upside? Yes, there is. Okay, I did a video earlier today, okay? The big news came out from Scott Bessent. Scott Bessent said that the United States and China are going to be meeting this weekend to talk about tariffs. If the United States can come up with an agreement this weekend, that'd be huge for the market. But there's a lot they got to discuss. For them to get it all done in one weekend, I think that's going to be very tough. Now, could we get something good out of that? Of course we could. Are we going to solve the whole thing this weekend? I don't think it's going to get all solved this weekend. It's going to take some time. But if we got some good news this weekend, you bet your butt it could make things go green. But we need that good news to happen this weekend with the tariff meeting. So what does that mean? That means if news breaks, I'm going to bring it to you this weekend. That's how dedicated I am. Trial by Fire says, with this economic rate slowing, will this affect crypto utility adoption implementation? Yes, it will. Here's why. If rates stay high, that means it's expensive, okay? Rates stay high means it's expensive to build. Right now in crypto, we need to what? We need to build programs that people want to use. Right now, we're just speculating, all right? So if rates are high, it costs a lot of money to build. It costs a lot of money to expand your businesses. Imagine you're a Bitcoin miner. Let's just make it easy, right? And you want to expand your Bitcoin mining business. Would you rather expand your Bitcoin mining business paying 10% interest? Or would you rather expand your Bitcoin mining business at 7% interest? You would rather expand it at 7% interest, right? It's the same thing with developing crypto. Would you rather pay your crypto developer 7% on your loans or 10%? You see what I'm saying? DG says, what's the pros of lower interest rates? Lower interest rates means you could take more risk because money is cheaper and crypto is risky, which is good. The other thing means what? Means you can carry more debt without that risk biting you in the butt. That is extremely, extremely important. All right? Lower rates are good for crypto and they're good for growth sectors. Crypto is a risk and growth sector. Okay, how does crypto bloom? By getting more people into it. How do you get more people into it? Rates coming down, making it less risky. You don't want to put money, expensive money, into a risky sector. Let's see. AIM USQC says, if we got bad news, why is the price not going in the buy zone? Tired of being in the friend zone, like you say. Because we've got a lot of support right now at where we're at. Specifically for XRP, we're getting support in the $2 zone. The reason we're getting a lot of support at the $2 zone is because we still have a lot of good things going on. Rates aren't that high. They were a lot higher. Here, watch this. Let's go to the St. Louis Fed. Give me a second here. Fed interest rates. Hold on. Interest rates. Give me a second here. I'm going to bring up Fed interest rates. Federal fund rates. Okay, here's why. Because check this out. We're going to look at the 5-year Fed fund, because Fed fund rates are down. Fed fund rates are down 100 basis points. So we still have rates cheaper than where they were a year ago by about 100 basis points. We also have what? We also have a more pro-crypto president. We also have a more pro-crypto Senate, a more pro-crypto House. So we have some things in our favor. That's why crypto is not completely falling apart. Great question, by the way. Let's see. Gary Duncan says, what do you think Trump's big announcement is? I honestly don't know, because what I'm wondering with that is I'm wondering if we're going to get something with the strategic reserve, because we haven't heard anything about that recently. Think about that. Have we heard anything since the original post from Trump on True Social regarding the strategic reserve? Just throwing it out there. Black Apple says, if Powell went out, who would be great to take his place? Ooh, I can't think of a person that I would pick personally, but I would hope whoever we get, that it would be a much more, and don't take this in a political way. I would want that person to be much more aggressive. I would really want the next Fed head to be much more aggressive person to match the aggressiveness of the president. Because think, Trump is an aggressive president, right? Whether you like it or not, he moves fast. I think you need a Fed head to move fast too. Curtis Reese says, are you big into XRP? Yes, I'm big into XRP. My channel is built around XRP. So yes, I'm very big into that. Let's see. Any other questions that y'all have? No, Gary Gensler is not going to be the next head of the Fed. Bad. I don't know. Maybe Eleanor was talking about Bostic, Gary Bostic. I don't know. I don't think I would be a fan of Bostic being one of them. I don't know. You've got a couple people in the Fed that are pretty cool, but I think the problem is I think I'd like to see someone a little bit outside of the current Fed leadership in there now. Just throwing it out there. Mushtaba says, Klaus, please read this. Done. Let's see. Yeah, no, I cannot imagine another round of that clown. No, I don't think you're going to see another round of Jerome Powell. I don't think that would happen. I really don't think that would happen. You need a Fed head that's going to match the speed. You know what I mean? Like, you really do. You need a Fed head that's going to match the speed of what's going on. Krishna says, rumor has it Klaus is replacing Powell by the end of the month. No way. To be honest with you guys and gals, I think I like doing this so much that I would have a really tough time, I think, ever doing something different in my life. Seriously. I really do. I think I really like doing this so much that I like hanging out with y'all. Oh, yeah. Let me show y'all something really, really quick here. I want to show you this. The pairings. Are y'all watching the Japanese yen pairing? This Japanese yen pairing is all over the map with Binance. All right? Don't read too much into it, but start paying attention to it because the volume is going from like nothing to like absolute bonkersville. So just throwing it out there. Just throwing it out there. DG says, do you think XRP will become a commodity and regulated by the CFTC? I don't think that crypto is going to fall under commodity. I honestly think that you're going to see crypto go more the securities related thing because I want you to think of more of like what a commodity is. I want you to think of gold. Who mines gold? Who owns gold? No one really owns gold, right? It's in the earth. You mine it. It's kind of like Bitcoin. It's the same thing, right? You mine it. You know what I mean? So XRP, who owns it? It's Ripple owns it. They control it. Who owns XLM? Stellar owns it. Who owns TRX? Tron, right? You see what I'm saying? So I kind of see a lot more of cryptos falling under the security umbrella, but the reality is this. I don't think crypto should be labeled as security either. I think we need a whole new category, to be honest with you. I really do. I think we need a whole new category. Really, really do. I don't know. I think, okay, you notice how like Jerome is out of touch with stuff and he's slow to react? Isn't that the same thing with like the majority of our politicians too? Right? Aren't the majority of our politicians just not doing it? They're just too slow. Klaus, I need your thoughts on the 10x daily turnover and how it could impact the price of XRP. I mean, I don't know. I really don't have much of a vibe on that. I mean, just throwing it out there. Mainly because, you know, it's kind of like a see it when you believe it type thing. And I'm not being pessimistic, but, you know. You just see so much stuff that's posted out there that's just complete garbage. Trial by Fire says, I was literally thinking 3 categories. You do, I do. I think you need a new category for crypto. I really, really do. I don't think it falls under the category of securities or commodities. I think you need a whole new designation out there. Juan Carlos Rosales says, yeah, we got a lot of slow politicians. And that's like, okay, here's the problem. Trump got inaugurated in January. It took 3 months, dude. 3 months, man. All right? 3 months to get the SEC guy in. Mushtaba says, when I pay my taxes, I would love my government to spend it on people like school, university, and infrastructure. But they don't. They use it to make guns and weapons and to sell it to other countries. Dude, we see it here in the United States. Our tax dollars go to junk, man. Seriously. Our tax dollars are wasted. I don't mind being taxed, okay? I really don't. I don't mind being taxed as long as my tax dollars go to something that's worthwhile. Now, if you're going to tax the crap out of me, though, you better make sure it's useful. If it's not being useful, then no. Just throwing it out there. Curtis, I really don't have like an opinion on it. I got to be honest with you. I really don't have an opinion on it. ETFs. Yeah, okay. ETFs are a big one. Spot ETFs specifically are a big one. Spot ETFs are big. Spot ETFs are where this is all about right now. All right? That's where I see a lot of opportunity for all of us are spot ETFs. We need that. Stephen Baird says, I can't see how non-stablecoin crypto can really go parabolic right now. All we're going to get is more stablecoins, and gas fees ain't going to make retail rich. Yeah, gas fees are not going to make retail rich. That's plain and simple. That ain't going to happen. You don't believe me? All right, let's have some more fun. Let's do it. Let's do it. Let's go talk Stellar because everyone talks about the burn rate of Stellar. Okay, there's 5 million XLM in the fee pool. Oh, dang, big kids. 5 million XLM in the fee pool. But there's what? 30 billion in the circulating supply? Come on now. Come on now. $5 million in the fee pool and there's $30 billion in the circulating supply? Burn rate ain't gonna make anyone rich. Burn rate from XRP ain't gonna make anyone rich. Burn rate gonna make anyone from XLM rich. Plain and simple. That's just how it is. And taxes, for real. You gotta pay taxes. How else are you gonna build roads? What are you gonna do? You gonna walk on dirt roads? What about your schools? Everyone gonna be able to homeschool their kids? No, parents work. So we have to be realistic. You have to pay some taxes. You know what I mean? You gotta pay some taxes. But use our money correctly. Okay? It's just the truth. What about our roads? Roads don't get paid for free. No, you gotta spend some money to get there. Just throwing it out there. All right, let's do this. We are gonna wrap up the stream at 4 p.m. Eastern time. I'm gonna put that down in the chat. 4 p.m. Eastern time. Stream ends. Last call for questions. The industry. Okay, guys, taxes are not bogus. Who's gonna pay for your schools? Do you think people that make minimum wage can afford private schools? No, they cannot. Do you think cities, like rural cities, can afford public roads everywhere? No, they cannot. Yeah, exactly. Minimal taxes. That's exactly the key. Minimal taxes. End of stories. Kraken Storage says, Crypto with Klaus, where do you stand? We must know. Where do I stand with what? Ask me, I'll let you know. I hope Trump's big announcement is about strategic reserves. I really, 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 really hope. Really, really hope that's the deal for that. I really, really hope that's the deal for that. Yeah, who is going to pay for fire departments? Who's going to pay for police departments? Who's going to pay for military? It's true. Stephen Baird says, can you recommend a good brand of electrolyte powder? I like Nun Hydration. I love Nun Hydration. I do. Totally love Nun Hydration. Where do you stand with HBAR? I mean, Google is a partner, so you know they can't fail. That's not true. Just because you're a partner with someone doesn't mean you can't fail. That's not true at all. Stellar's a partner with IBM. That hasn't helped them at all, has it? Look at their price of Stellar. Has IBM's partnership with Stellar helped the price of XLM? Nope, has not helped at all. Partnership equals bullshit. Partnership does not mean anything. Anything at all. Taxation without representation is bogus. True. No problem, Stephen. Anything else that you guys, gals, and blue-haired giraffes would like to ask question-wise? Open mic right now. My partner left me so partnerships can suck. Well done. Juan says everyone needs to be homeschooled, their own little animals. Yeah, it is pretty funny. I don't know. I think, look, you know what you really need? We just need more efficiency with government. We need less waste. No, it's not that I downvote HBAR. What I downvote is the importance of partnerships. What has MoneyGram done with Stellar? Has MoneyGram done anything to help out the price of XLM? No. Mushtaba, I read your comment, dude, about the weapons and stuff like that. I read your comment, my guy. But I mean, think about it. What has the MoneyGram partnership done with XLM? Hasn't done anything. Krishna is sending 5 memberships out there for people. Jump on in it now. Way to go, Krishna. Everyone give Krishna a big thank you for that. That's freaking awesome. Thank you, Krishna, for helping 5 people out. That was very, very cool of you. Krishna, rock on, dude. I think that's awesome. That is paying it forward. I think that is cool. That just gave me the chills. I think that is so cool. Phase 1 says all of the schools and stuff should be state tax, not federal tax. Love it. I'm a federalist. For those of you that do not know what that means, I believe the state should have more rights and the Fed should have less rights. I totally think that way. I totally think that we should have a very, 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 very small federal government and that the states should have more power. That's totally what I think. James Morton says, Klaus, do you think Jerome has an elitist handler who's controlling the markets? No. I think Jerome Powell is an elitist himself, and I think he's so far removed from what everyday people feel that he has no idea that what it's like to be an everyday person. I don't even know if the dude pumps his own gas anymore, and that's kind of messed up. Government should be very small, counted on one hand. I agree. I do. Your state government and your county government should be big. The federal government should be tiny, man. Should be so, so, so tiny. Dingus Khan says, amazing work. Best crypto show on YouTube. Thank you. I appreciate that. Powell is antiquated. Most of our politicians are. Elizabeth Warren is antiquated. What has she really done that's worked? What what anything has Warren done that has really been good? She hasn't. Plain and simple. James Morton says, disconnected from the people. Agreed. How do you serve the people if you don't know the pain that the people are feeling? How do you serve the people if you don't know what the people really need? Isn't it the same thing at work? Like if you work for like a really, really, really big company, if your boss, if your manager has no idea what it's like on the production floor, how do they even know what it's like if they don't even talk to you? You know what I mean? Like that's a big problem. Trial by Fire says we live in a digital world. Embrace the change of speed. Agreed. I totally agree. It's frustrating. Oh, Rides Care has a good one. The word partnership is a buzzword in crypto. Big hype means nothing. Lots of fake till you make it in crypto. Agreed. Partnership equals bullshit. Trick says, catch you later, Klaus. Great show. Thank you, Trick. Thank you for the emails. And Trick, remember, London, my guy. London, my guy. Curtis Reese says, if I pay tax on my salary, I'm not paying tax on my investment or gambles. I agree. That's layered taxes. I don't like that. I don't like layered taxes at all. They are far removed from the average person. I totally agree. They are very far removed from the average person. I think the problem we got is the system itself is far removed, right? I mean, think about it. Do you think the average person or the average politician in DC? Yeah, Moshtaba, seriously, man, you've got some great thoughts, dude. Moshtaba is one of the great viewers from the Middle East that loves to chime in. Love to hear your story, my guy. But seriously, you guys and gals tell me, what person in DC do you really think lives a normal everyday life? They don't. Even, what did Trump say? He said he doesn't even drive a car anymore because it's a liability. That's how sad it is. I could go out there today. I could go out there today and drive my car. Like, that's sad. You know what I mean? Like, these people are very removed from reality. How many more subs before hitting 45,000? I think I'm pretty close. I think I'm at like 48, 49, something like that. I'm at 44,920. So I need 80 more subs till I hit 45,000. That's it. 80 more subs and we hit $45,000. Thano says, can crypto buy up the U.S. national debt? No, crypto cannot. And why would you want crypto to buy the U.S. debt? Why? Like, why? Oh, Moshtaba, why in California, my guy? California is so expensive, dude. I'm glad you're here in the States, man, but Cali is so expensive. Oh, it is. It is crazy expensive out there in Cali. But glad to see you in the States, dude. That's freaking awesome. Good for you, man. That is awesome. I like that. But no, you don't want crypto buying the debt. What's the point of that? So that we can just, I don't know, print more debt? Let me get a quick drink right here. We got 3 more minutes. Get your last questions and comments up on the screen, chat. And if you haven't already, please sub to the channel that I've got pinned at the top of the chat. I'd greatly appreciate it. And drop a like if you don't mind. Oh, man. This was a little rough on my jaw today, I got to be honest with you. Jose Lebo says, what do you think about the new ETH roll? I haven't looked into it enough yet. I have not been that impressed with ETH ever since Buterin did the power play thing. Seriously, once Buterin did the power play thing and wanted it done his way, I have not been impressed, man. Are the XRP ETFs approved yet? We've got 2 that are approved, that's it. But nothing juicy yet coming. Stephen Baird says, Klaus, when are you coming to Scotland? You know, I've booked a vacation. I'm just throwing it out there. I have booked a vacation. I have to book another one. I'm not sure I'm going to go for that one. I haven't decided yet. So I'm up in the air on where I'm going to go. I will let y'all know, though, when I do decide. Glenn says, I think if more states have power, it'd be an efficient rule. Every state needs other things and have a different industry. I totally agree. Glenn, you are 100% right. Because what South Carolina needs is different than what Alaska needs, and it's different than California. I totally agree. Well done, Glenn. Trial by Fire says crypto protection. Cold wallet versus institutional grade. Cold wallet all day long. I do not trust institutional grade custody at all. By the way, try Expedition 33. Great game. I have not heard of that, by the way. I've been retro gaming lately. I have been kicking out the Nintendo, the Super Nintendo, and the Nintendo 64. Sprechen Sie Deutsch, Klaus? Jawohl, mein Freund. I can speak some of it, and I can understand a fair amount of it as well. Before you leave, tell us your latest slab purchase. Ha! All right. Hold on. I just put my box away because I cleaned my room. I bought more Cardus Mario cards. Here, hold on, here. I'll show you guys and gals. Hold on, let me do this. I'm gonna flip some lights. It's gonna get real bright in here. Here you go. So some slabs over on that wall there, and that wall over there. I have been buying lots of Cardus Super Mario Bros. 3 cards. Lots of them. Just throwing it out there. Favorite SNES game? Soul Blazer. Putting it out there. Soul Blazer. Frickin' amazing game. All right, everyone. I am going to put some music up on the screen. I'm going to hang out with chat for a few minutes. I will catch you cool cats later. And as always, choo-choo what? Choo-choo, bitches, girlfriend.
Some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry. Oh, 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 kind of butterfly. Baby, you give me midnight. whip up my appetite. Don't leave me here high and dry. Oh, well, I don't wanna jinx it, baby, and twist myself at the spine. Don't wanna overthink it, baby. It's just twist your body and mine. Baby, you give me ice and fire. You're giving me wind and rain. You're some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry. Oh, but I don't wanna jinx it, baby. Just not get ahead of my time. Oh, but I don't wanna miss you, baby. So I stand up and speak my mind. Oh. Baby, you give me ice and fire. You're chilling wind and rain. You're some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me